Good day, everyone, and thank you so much for joining us today. We're really happy to have all of you here for this training session. Today, we will talk about the fundamentals of carbon accounting. In this session, we will learn what carbon accounting really means in the context of today's reporting requirements, why it is critical for sustainability reporting, ISSB readiness, and decarbonization strategy as well. And we'll also talk about how organizations measure, manage, and reduce their carbon emissions effectively. I'm Ting talking to you today, and I'm the moderator, part of Eco Sustainability team. And together with me, we have Keegan, one of our very own sustainability professionals in the region. He's one of very few with the ISSB FSA Level 2 credentials. And he's also an ISO 14064 lead verifier. He not only teaches sustainability, but he's also a contributor to global standards as well, including ISSB, VERA, SBTI, the GHG Protocol, and a few others. So today we're really in for a treat, I feel. He's just not going to teach carbon accounting, but he has really helped shape the rules behind it as well. So I'm really excited for your sharing later, Keegan. I can't wait. But just give me a moment. Could I have the next slide for me to explain a little bit about us? Okay. I don't see the slide. Okay, a bit about us. We are a sustainability consulting firm headquartered in Singapore, and we have consultants all over the region. You can see in the map across Cambodia, Malaysia, Thailand. We have a few consultants in the Philippines as well. And our latest addition is in Indonesia. We have consultants there. So if you are from the region, you can reach out to us. We can offer you our services. Or if you're outside the region, you could also link us up. We could also share our knowledge and our services with you as well. Okay, next, if I could explain to you what we do. You can see on the slide, there are 5 things, but our main services is really sustainability reporting. There are like so many standards out there. But the main focus is ISSB, especially in the region. We focus and we have expertise in about 17 different standards, and we do assurance as well. Other than that, we do consulting, carbon credit projects, and of course training, which is like today. Today we're giving sort of like an intro course, but we have longer sessions, which we will explain to you and share with you at the end of the training. The other thing that we're really proud to do is we have a policy arm called the Climate Policy Lab, where we do our standards contributions, which bring us back to our next slide. Okay, yes, this is my favorite part, to explain what we do as a team and what our passion are really, and what does standard contributions mean. There are global standard setters like the ISSB, SASB, GHG Protocol, SBTI, VERA, and so on. There are so many standards. And then there are the standard users, where people who prepare reports use these standards. And then in the middle, there's a bunch of very unique people that sits in between the setters and the users, and they're called the standards contributors. And that is really who we are. We provide technical commentary to the standards setters in order to develop the standards. So we contribute to exposure drafts and technical consultations. So it's a lot of reading. That's how most of our consultants spend their nights. It helps us sleep better at night, but it also help sort of frame this team. We really focus on this part of our work, and we're very passionate about this. So today, you are really not learning from just users of the standards, but you're learning from people who are actively developing them as well. So we're very proud to say that, to mention this to all our learners all the time. And okay, next. Before we start, just a few housekeeping rules. This session is, of course, recorded, and I think everyone is really okay and keeping their mic on mute so this can minimize the background noise. If you have a question, please drop us in our chat. We are so happy to answer all your questions. There's no silly questions. Um, Please make this space a safe space so we can learn together. As you know, sustainability is something quite new as well. It's new to you, new to us. We can discuss. So do share your questions. At the Drop it in the box, or perhaps you can we have a Q&A session at the end as well. So together with me, Keegan, I'll pass it to you. Over to you, Keegan.
All right, thank you very much, Ding. So welcome to the carbon accounting. Gosh, wow, what an exciting topic. But I promise you there will be very little calculation today. What I want to do is basically to give you a framework to think about carbon accounting. I think that's more important because carbon accounting itself can be very simple and very complicated. Simply put, it's just A times B equals C. That's all, right? But I want to give you a framework. I want to do something that's different. Once I share with you how to see carbon accounting, the the entire world of carbon accounting will make sense to you. That's what I wanna do today. I promise there will be very little calculation, because all that you can learn on your own or you can take a course. Okay, so what is carbon accounting? Let me give you an analogy. I see in the group there is May, Marshall, and Mariam. Okay, the three M's, okay? All right. Let's say me, May, Marshall, Mariam, we decide to have dinner, all right? So I come first. I arrive first. I'm waiting for the rest, and I order a drink, right? Orange juice, right? And let's say, May comes next, and I say, hey, May, we're waiting for Marsha and Mariam. Let's have another drink, okay? So I'm gonna order my second orange juice, and May is gonna order her first orange juice. So now I have two orange juice, and May has one orange juice. Let's say Marshall, sorry if I mispronounce your word. Marshall and Mariam appears. Marshall feels a bit fancy and wants to have a lobster. Okay. Maybe Mariam and May, you guys are a bit too full. You don't want to eat too much. Maybe you want to share a pizza. And I'm just gonna have a pasta, right? And I suggest to the team, maybe, we'll have some starters, French fries, maybe, and dessert. Maybe we'll share the dessert. So my question is, when the bill comes and it's $100, how do we split the bill? That's a good question, right? So if you're like me, I hate calculation. So I'm just gonna say, hey, May, Marsha, Mariam, we're gonna split it equally. It's $100. Each of us pay 25. Simple, right? But the question is, does the 25 reflect reality? That's the most important part. Because maybe Marsha and Mariam, you guys are sharing a pizza. In one pizza there are, six slices. But maybe Marshall, you had four, Mariam, you had two. Can you actually come up with a fairer way of calculation? Of course you can, right? What do? You itemize. You say, well, Keegan, you had two orange juice. May, you had one orange juice. Basically, you just itemize it, right? So that's the second method. The first method, you split equally. The second method, you itemize. But Marshall, you had four slices, and Mariam, you had two slices of pizza. If you want, you can actually go down to the granular detail if you really want, right? You just split the cost of the pizza into five pieces, right? And then everybody just pays what they ate. Although it's a bit difficult, but in theory you can. If I order a bottle of wine and I pour equally, then it's very easy to share. But if I pour more wine into my glass, in theory, you can actually calculate per ml if you really want, right? Now you have three ways of calculation. First, you split in equally, then you itemize, or you can go to the granular detail and go by milligram, by how many French fries you ate, by how many mouthfuls of pasta you ate. In theory, you can, but that's a little bit difficult, right? But in carbon accounting, we want to move towards the third method because carbon accounting at the end of the day is at best an estimate. It's not like financial accounting where you move $1 from A to B and you can account every single cent, every single dollar. Carbon accounting is a bit different. Carbon accounting is at best an estimation. This is what you need to remember. What happens, what you put in the carbon accounting does not necessarily reflect reality. I may have eaten 4 slices of pizza, but the carbon accounting shows that I've eaten three, right? So, what's the message here? The message here is at the end of the day, a carbon accountant is a bit like a lawyer. You have to make a case to what methodology you use and why you use it and why it is the best methodology for this purpose, right? If you can remember this, you will understand everything you need to know about carbon accounting, right? So, first of all, first and foremost, what on earth is carbon? I think most of you understand already, but let's just make sure we are on the same page. It's a bit complex here, but let me explain like this. If you're in a room, when you turn on the aircon, you put it at 16 degrees, you put on your blanket. It's nice, right? It's nice and toasty, it's a little bit warm. But if you put two blankets and you put three blankets and you put four blankets, suddenly it becomes hotter and hotter because heat is trapped under the blanket. So think of carbon as something similar. Um, Carbon by itself is good. Remember that. A lot of people misunderstand. They always think carbon is bad. It is bad only when there's too much carbon, but carbon by itself is good. Why? Because the space is really cold. It's around I think 200 negative 270 degrees. So we freeze to death. Humans will freeze to death if there is no carbon in the atmosphere to protect us from the cold. But the problem is when there's too much carbon. When there's too much carbon, the earth gets warmer and warmer and warmer. It causes global warming, which then causes climate change, right? Now, I want to throw you a challenge. So, you guys know recently in the US, there was a big snow blizzard, right? And Donald Trump was saying, "Oh, you guys know he's a skeptic, right, of climate change." He was like, all you environmentalists, you're saying there's global warming, but look, we have too much snow. So I want to throw you a challenge. What does global warming have to do with snow? I mean, it's supposed to be warm, so there should be no snow, right? How come certain parts of the world have more snow than normal? Right now, if you know the north of Japan, if you've seen on Facebook, it's quite a catastrophe, right? Like 1 meter of snow. How come? What does that have to do with global warming? I'll throw you that challenge. You can read up about it, but every significant climate change has to do with global warming. All right. So we so the message here is too much carbon causes global warming. That's why we need to reduce carbon. And when we say carbon, we are using a very generic word. So imagine if I I say Henry has 100,000 Indonesian rupiah. Okay, Jiahen, you have 20 Sing dollar. Check one, you have 50 ringgit Malaysia. Teng, you have 200 Thai baht. What does that mean? Do we understand what that means? We don't get it because the numbers don't make sense unless it's your currency, right? So what we do is we convert into US dollar. So if I say Teng, you have 10 US dollar, Henry, you have 20 US dollar, Jiahen, you have 50 US dollar, everybody understands that, right? So what we want to do is to convert to the US dollar of gases. And the US dollar of gas is, of course, CO2. CO2 is the US dollar of gases that all other gases measure against. So you guys know the seven gases. This is very important. There are 200, I don't know, there are hundreds of gases naturally, but we only care, when we do carbon accounting, we only care about seven gases. You can see the list. The famous ones are, of course, CO2, methane, nitrous oxide, hydrofluorocarbon, these are very difficult to pronounce words, perfluorocarbons, sulfur hexafluoride, and nitrogen trifluoride. Okay, these are the family of fluorinated gas. All right, so what's the difference between all these gases? We count by what is called a global warming potential. That means one unit of gas is able to warm the world by how much over a period of 100 years. You know, carbon stays in the atmosphere for a very long time. That's why today's climate change, today's amount of carbon in the atmosphere, it is a lot of it is actually generated during the Industrial Revolution in Europe. So if you look at the topic of climate justice, uh, do read up about it. Climate justice talks about the amount of carbon that was emitted during the industrialized period, during colonialism, when the colonial powers extract resources and then burn coal and industrialize and get rich. Today's climate change has a lot to do with industrialization because the carbon remains, the potential for warming remains for a very long time. So if you look at the um, this chart, you see AR5 stands for Assessment Report 5. Today we're in AR6, but a lot of people still use AR5 because it is a very good assessment report. You see, carbon dioxide is the unit is always one. Methane is 28. What this means is one unit of methane has 28 times more potency than CO2. And if you look at sulfur hexafluoride, SF6, is 23,000 times, more than 23,000 times more potent than CO2, right? That's why we care a lot about these gases because the potency, the impact to climate change is immense. All right, so why you might know that the whole purpose of reducing carbon is because we want to keep global warming to below 1.5. And a lot of scientists have there's a consensus already that 1.5 is quite impossible to reach already. And now we are aiming for 2 degrees. That means the Earth cannot be hotter by 2%, 2 degrees because of all the consequences you can see here. Um, One of the big thing, because I'm a diver myself. So if you look at coral reefs, the blue one on the bottom, if the Earth hits 1.5 degrees, 70 to 90% of coral reefs will be compromised. And if you hit 2 degrees, 99%. So this is very personal to me. Um, so you can see that things are not looking very well. We are actually on track to exceeding 1.5, sadly. Um, and we'll just do our best to reduce it to not hit 2. And this is one scary slide. Despite all the best effort that we are putting in right now, making reporting mandatory, having a good carbon market, implementing carbon tax, forcing all the companies, sadly, like all you guys here, half of you guys are from companies and you have to do reporting. Despite our best effort, it is possible that we are not really on the right track. I'll go a little bit faster. I'm mindful of the time. So, what is the solution for global warming? On a global level, you guys might have heard of the COP. So, what COP stands for Conference of Parties. Why do we say COP? Why do we say Conference of Parties? Because we don't count countries, right? Countries are hard to define, so we call them parties or jurisdiction, if you like. You might know the two most famous COPs, which is the Kyoto Protocol and the Paris Agreement. And a lot of things that we do today stems from the great work that has been done by very talented scientists and accountants and uh, policymakers from the Paris Agreement. And our founder, Dr. Vincent, was actually one of the speakers for the COP28 in Dubai. Some of you may know COP28 was very significant because of that was the first time globally every country in the world promised to transition away from fossil fuel. As you know, fossil fuel is one of the biggest emitter in the world. You might know the COP after that. There was in Azerbaijan. That was the finance COP, and last year in Belém in Brazil, that was the COP that talked a lot about finance and carbon credit as well. Okay, let's jump straight into what is carbon accounting. Carbon accounting is the quantitative tracking of the amount of greenhouse gas, we say GHG sometimes in short, emissions in terms of carbon dioxide equivalent that are released into the atmosphere as a result of anthropogenic activities. Okay, what does this mean? Quantitative tracking is a very important word. You are able to quantify, and now carbon accounting is very similar to financial accounting, right? In financial accounting, there is debit, credit. If you spend on certain things, there are line items there are categories that you put into. It's the same in carbon accounting. The amount of greenhouse gas emission in terms of CO2 equivalent. So sometimes, not sometimes, all the time you will see GHG being represented by TCO2E. T stands for ton. We don't count by kilograms. We count by tons. TCO2, which is carbon dioxide. Remember I told you all the other gases measure against CO2. And then we have E. E stands for equivalent. So it's not CO2, but it's CO2 equivalent. It's like saying, I have 100 US dollar equivalent. It means I don't actually have $100. I have the equivalent of $100 US dollar. All right. That are released into the atmosphere as a result of anthropogenic activities. What does anthropogenic mean? We have a lot of big words in carbon accounting. It means human activities. So, what you do every time you turn on the lights, every time you turn on the gas, every time you pour diesel into your machinery, you are emitting carbon. This word is very important because technically, naturally, the world emits carbon. In the forest, every time a tree dies, it emits carbon, right? Every time a cow farts methane, it emits carbon. But you don't count all that. You only count what your company emits. Okay. Um, all right. This one I think most of you kind of have an idea, but let me just explain. So just like financial accounting, carbon accounting is very established it's a very established domain of knowledge. We have scope one, which is the energy that you burn yourself in a company facilities. If you use gas, if you use diesel fuels, that is under scope one. Scope two is basically energy that you purchase. That means you ask someone else to burn for you. So right now I've got my aircon on. So I turn on my aircon. Someone's burning this electricity for me. My energy provider is burning it for me. Whether they're burning coal or whether they are using solar energy, whatever they're doing, they're burning, I mean, they are emitting some kind of carbon, and I pay them to emit so that I can get energy, right? Scope three is everything else. If you are a company and you have employees, right? Every time an employee goes to office or every time an employee flies overseas for work, you have to account for that, right? And you can account for that. For example, if you fly from Singapore to Bangkok per person, economy class, you can actually account for that. There is an actual number. Purchase goods and services. Did you know that every time you buy something, you are actually causing emission indirectly? You are causing the emission because someone else have to emit to produce the product so that you can buy it, right? Um, Everything has carbon, including how many of you run ads or you're on social media? You do advertisement like Google ads, Facebook, TikTok ads. Did you know that every time you pay Google to run ads, you pay Facebook to run ads, you actually have to disclose that as well because when you pay Facebook, the server is using electricity to run your ads. So you have to account for that as well. And there's a methodology to account for that. Waste, business travel, capital goods, transport and distribution, that's upstream. For downstream, it's more on your customer side or whoever you sell the products to, um, including franchises. So if you're McDonald's and you sell a franchise to a franchisee, the franchisee is your scope three. Okay. Time check, 11:30. Okay, I better move a little bit faster. Um, Okay, so you know there are two main standards. It's called the ISO 14064 and the GHG Protocol. They're unifying more and more. So that makes our job much easier. Okay, how do you um start? Okay, I'm using the ISO 14064 structure. First, you decide on the organizational boundary. Now, this sounds very simple, right? If you're one company, the boundary is your company. But real world is really, really complex. Some people buy 30% of another company. So what happens? Or some people own the company, but are not involved in the operations of the company. So what happens? So the boundary itself is quite a complex thing to do. The sources is what is the thing that emits, right? Whether it's your electricity, it's the gas that you use. If you open a boba tea or a restaurant, you use gas, right? So you list down all the emission sources and then you quantify it. You figure out how much did you use, how much gas did you use, how much electricity did you use. So for electricity, it's very easy. You just take the bill, right? But for others, it's a little bit more complex, especially when it's a manufacturing facility, for example. If you have multiple locations, it gets a little bit complex. If you're a global company, using electricity in Singapore is different from using electricity from, let's say, in Cambodia, right? Um, Reporting, then you do the GHG report. Okay. Um, step, I'm going to run through the steps. I'll run through a little bit faster because it's not so important for you to know the details. I just want to give you a rough overview. First, you define the organizational boundary. There are three ways: operational control, financial control, and equity share. 90% of the time, you probably use an operational control, right? But things get a little bit complex. For example, if you open a shop in a shopping mall, who controls the electricity use, right? Do you have a meter in your shop that shows exactly how much you use, or do you pay a lump sum and you can use all the electricity for free, for example? So this is where things get a little bit more complex. So the tough part about carbon accounting is not the calculation, it's figuring out all these boundaries. Remember, I said you need to make a case. You need to say, this client is not in control of his or her electricity. In other words, she can't figure out, for example, aircon, it's centralized most of the time. You can't say, oh, my shop, I don't want to use so much aircon. Can I not pay so much electricity? Probably you can't, right? So this is where the boundaries need to be drawn very nicely. All right. Um, Then you categorize your sources of emission. This is the large bird's eye view, but you have to go in specific detail. For example, let's take employee commuting or business travel. Okay, let's say business travel. Okay, business travel involves hotels. So every time you go to a different country and you stay, there is an emission factor. Whether there's a difference between a 3-star and a 4-star and a 5-star. The emission factor per night is different. You categorize them, you put them into scope 1, scope 2, and scope 3. In scope 1, you have to measure all 7 gases that I mentioned. Scope 2, scope 3, you convert into CO2 equivalent. Okay, then you quantify it. Um, this one it's a little bit more complex, so in the interest of time, let's just summarize it like this. Basically, carbon accounting is activity times emission factor times GWP. Remember the chart I showed you, the global warming potential? Um, you get all this data, you get your activity and your emission factor. Okay, what on earth is an emission factor? An emission factor is basically um, how much carbon is emitted per unit of, let's say, gas or diesel or electricity, all right? And the emission factor, you get it from a reputable source. Usually, the three sources that we generally go to is, of course, the most famous one is the IPCC. We don't call it EFDV. We just say IPCC. Everybody knows what IPCC is. You can use the US EPA or DEFRA, or you can use your local number. In Singapore, it would be the SERF. In your own country, you would have your so-called emission database. All right. So remember I told you before I started, I mentioned that the three, Mariam, the three M's, we went for dinner. Remember I told you there are three ways of calculating, which is the most accurate way of calculating. In carbon emission, we also have the tier, and your job is to always move down the tier to the highest level of calculation. So you can't just say, the bill is $100, we're going to split by four, my job is done. No, no, no. You have to move down to tier. But what happens if you say, but I don't have an Excel sheet, I don't have a calculator. Can we just split into four? Carbon accounting is rule based, which means if you follow the rule, you're good, even if the rule is not fair. Okay. So if I split the bill into four people, it's not fair, but you can because the rule says you can, right? So tier one is completely acceptable. But tier three is what you need to reach, especially if you want to claim things like net zero, carbon neutrality. These are, you absolutely have to go down to tier three, right? You, especially if you're paying for carbon tax. Can you imagine for a large company in Singapore, your carbon tax can go up to hundreds of millions, not just millions, hundreds of millions Singapore dollar. You can't just use tier one and say, okay, that's my carbon tax. Your auditor will insist you use tier three, right? Um, so I told you I won't go into the carbon calculation itself because I wanted to give you a framework. But assuming you are able to calculate, the fourth part will be to prepare the report. Basically, it's a table with a lot of supporting tabs. It's a complicated Excel sheet. Nowadays, people use softwares, but if you ask me, softwares are good if you're starting out, but the auditor will still insist on actual calculation. Okay, still, you can't run away from an Excel sheet, generally speaking. Okay, and you need to have, depending on the use case. So if you submit to for taxation, then you definitely need to be verified. If you send it to a large company, let's say Amazon is asking you for the report, or a European importer is asking you for a report, um, you almost certainly would need audit as well. And an auditor is called usually they are called VVBs, verification and validation bodies. And these are basically auditors. So it's exactly like finance. You have the preparer of the books and the auditor of the books. Okay, of course, just now I was talking about the tier, right? So sometimes people misunderstand. They always think as long as I give information, that's good enough. No, no, no. Because information is has to be material. Okay, material means Um, for example, if you tell me your scope three flight, okay, is 100 ton. I want to know specifically where did you fly, how many kilometers. You need to give a lot of details. You can't just say, oh, my employee commuting is 100 ton. People don't know what you mean. Like, how did you come up with the number? You need to have very complicated calculations, supporting documents. So if you say you fly 3 times from Singapore to Bangkok, show me your bill, right? You need to make sure that you can consolidate the numbers, so to speak. The auditors will definitely need to look into this. Okay, so I want to share with you, I think this is my second. Okay. I want to share with you a story. There was a sort of like a minor scandal by Singtel. It is a telecommunication company in Singapore. Okay, let's see what it says. The headline says Issue 107 Singtel's uncomparable emission. Okay, what happened was in the latest assessment report, Singtel stated that it cut total Scope 3 emission by 33.5% in the year ended March 2024 to 256 million tons of CO2e. Okay, here they use MT CO2e. That reduction came after an even larger drop in fiscal 2023 by 59 52.9%. In just 2 years, Singtel has cut Scope 3 emission by two-thirds, more than two-thirds. What just happened here? Singtel did not reduce. They just use a different methodology. Remember, I showed you the scope tier 1, tier 2, tier 3. So first year, they use a tier that's higher. Second year, they use a lower tier. And the third year, they use an even lower tier. All right? That's what it means by CEF, PCF, as opposed to IAEF. Basically, it just got more granular, which is good. That should be the way. Unfortunately, Singtel forgot to tell people that they use a different methodology. So what they claim is, I've reduced my emission by two-thirds. This is borderline greenwashing. I'm not saying Singtel has greenwashing. I'm saying claims like this borderlines with greenwashing. And greenwashing is an offense in many countries like the European Union and Singapore. What this means to you as a carbon accountant is when you calculate, remember I said you need to make a case. You need to say why I use this method, what was the methodology. So you can't just give the number, you have to write a long essay as to what methodology you use. You're like a lawyer making a case. Last slide. You might know that the reporting standard for sustainability report for many, many countries, almost every country in Southeast Asia, Singapore, Malaysia, Indonesia, Philippines, for those countries that have not, you will almost certainly adopt this standard called the ISSB. It stands for International Sustainability Standards Board. And in the ISSB, there is a section called IFRS S2. Don't worry about these jargons. The point is, in the standards, it will ask you for your GHG accounting. This is where you put your GHG accounting in the whole report. All right, I'm good on time. Just nice. Ding, over to you. You're on mute.
Okay. All right. Uh, Thank you, Keegan, for this intro training. I think even intro, it sounds very complex to me already. So I hope all of you have a broad and a clearer picture of what carbon accounting is. I hope you're all not more confused because due to time constraints, we could only share so much. But for now, if you have any questions, please feel free because Keegan is here. He has just recently completed the GHG Protocol Standards contribution. So he is the one of the best people to learn from in carbon accounting. So since he's here, feel free to ask questions. You can unmute your mic or type in the chat box. We'll give you some time to do that.
Yeah, but meanwhile, I also have a question for you. How many of you have actually prepared, have done GHG accounting before? Maybe you can put in the chat. If you have, maybe tell me if you've done scope 1 or all the way down to scope 3. Mariam has done GHG assessment for 3 times. Wow, very experienced already. Even if you've done it one time, it really opens up your mind to a lot of things. You can really learn a lot even one time. So Mariam has done it 3 times. Congratulations. Any other questions? No silly questions. Nothing is silly question here. It's a safe space. I think we can move on.
Okay, sure. Okay, actually, I was just gonna ask one question if I could. Like, why would company want to do this if it's not mandatory?
That's a very good question. So there are two reasons why you would do this. One is like what Ting said, it's mandatory. You're mandated by your government. Today, the trend is that if you think of companies in a pyramid, the top ones need to report, and then it will slowly broaden down to the SMEs. But if you're an SME right now, you're not mandated by the government. But what you need to do is you need to align with the large company. Remember, your scope one and scope two is the scope three of large companies because you are the provider, you are either a customer or a vendor to large companies. So the large companies are the ones asking you for the report, not the government, but it's the large companies. And if you don't do, then you will be much less competitive. I have a story from one of our clients who were requested by a global company. And in the procurement, brief, it says failure to provide this report will result in reduced business opportunity. This is a real case, and this is the trend now globally. If you don't report to other companies, they will move you out of their supply chain.
I think there's another question, Keegan.
Oh, it says, can you share the WhatsApp group in the chat? Okay, sure.
Yes, that will be the next slide. Yeah. Can you hear me? Yes, huh?
Yeah.
Okay. Yes, so this is the next slide. I think Maria requested. Please do scan this WhatsApp link to join our community. Here we have updates and we also share some industry news as well. I think from this year onwards, we'll probably start to share a lot more industry news in our chat. So do scan and join us. I think we can go to the next slide. Or is there any more questions in the chat, Keegan?
Yes.
Yeah.
Um, Ali is asking, how does carbon accounting contribute to compliance with CBAM? Okay, I'll move to Carol first.
Okay.
Step two. Okay, so Ali is asking, what does it have to do with CBAM? For now, so to context, CBAM refers to the carbon border tax. What it means is if your country is not taxing you, in your own country, when you export your product into the European Union, uh, you will be taxed after the border. Okay, so what carbon accounting does is for CBAM, uh, there are different tiers because it's the first year of implementation, so the rules are slightly more lax. It's still very difficult. But eventually, they will move to what is called a life cycle assessment as well. So, what is the carbon footprint of that particular product? So, you have to show the carbon footprint of the product, which is uh, even more difficult to do. What I shared today is organizational carbon footprint, but for CBAM, they will require product carbon footprint. That's slightly more difficult. So most people will need to do the organizational carbon footprint and then the product carbon footprint. Kirill asked for step 3 and 4. Okay,
Yeah.
so this is step 3. This is step 4, and then prepare the report. Okay, thanks. Sorry, back to you. Ting? Yeah, back to you. Oh, you're on mute.
Let me unmute it. Thank you. We hope everyone got their questions answered. Can we? Yes. Thank you for the next slide. just because we have we also have like a 1 full day training. As you can tell, we have so much information and knowledge to share. I think the team has spent the last 2 years compiling and learning about this sustainability reporting and carbon accounting. Unfortunately, this 1 hour talk, we could only share some. Do join us if you're interested to learn more and with us. So from this 1 day training, if I could share, you'll be able to master ISSB standards. You will be able to perform advanced carbon accounting. And on top of that, we will also talk about stakeholder engagements as well, as part of the sustainability reporting. So we have a lot to share. So this will happen on the 13th of March, a full day online. It's a paid training. If you are interested, let's go to the next slide. Yes, thank you. So for this very special offer just for today, for the participants today, we are opening up this course on the 13th of March only. The 1 day program is $250 Sing. It is a very good deal because the usual price is usually ringgit 1,008 per day, but just for today we're offering it for 250 because we really want to share our knowledge with this passionate group of people here today. On top of that, if you want to get a better deal, you know Malaysians love discount and deals and all of that. If you sign up early, by 29 Feb, I think we don't have 29 Feb, only 28 Feb. So anyway, if you sign up by end of this month, we will have a 50 Sing dollar discount on top of that, so $200 Sing. Do we have the QR code? If you don't have the QR code, it's okay.
Yeah,
We
I
will.
apologize. The QR code doesn't seem to appear. If you guys don't
Mhm.
mind joining the WhatsApp group, we'll
Yes.
send you the registration link in the WhatsApp group.
Yes.
I've put the WhatsApp group in the chat group chat already.
Okay,
Yeah, so
great.
do
Thanks,
join that.
Stephen.
Then we'll send you the details.
Yes. So just to let you know that if you register within the next 24 hours, which is tomorrow noon, you get to bring a friend along to learn it with us as well on this paid 1 full day online training. So we hope you can come or share this with your friends as well, because we have really spent hours, actually months and years preparing together all this information. So do come and share. Um, Next, I think, yes, we have been doing all this sustainability talk series. We really like to share our knowledge with you. We have completed 2 cycles. I think we have a series of 8. If you could move to the next slide. Um, yes, so this is our 7th talk. So next one will be our 8th talk. The next session will be on the 23rd of Feb. We'll be talking about ESG landscape and how we can use all these standards practically in our region in Southeast Asia as well. So do join us for that. Next slide. Oh, thank you so much for your time today. I think, yes, we have 4 minutes to 12. We have kept within the 1 hour. Thank you, Keegan. And thank you all for joining us. Thank you so much. Join our WhatsApp, keep in touch. We are also on LinkedIn, and do check out our website as well.